Let's take a look at some information charts on MakerDAO for Brave New Coin. One of the earliest of the DAOs, it is a lending and borrowing protocol, which first used single collateral loans in ETH and learned the pitfalls of that experiment and moved on to multi-collateral loans, which is where we sit now. They have a governance component like most lending and borrowing or anything on DeFi, and you can view that. You can view those polls, who's voting on what to get added or what to change rates to or things like that. Interesting to study, not necessarily going to move the needle price-wise for the token, but as far as the lending and borrowing side goes, they have an app called Oasis now. It's super easy to connect your MetaMask or hardware wallet, and off you go in a few simple clicks. My issue with Maker for most people, if you're using lending and borrowing and you're a retail participant and you get to this part where you're like, do I want ETH A, B, or C vault? Aren't they the same? Oh, okay, they have different stability fees. They have different minimum collateral. Like you have to know a little bit more here than just going to Aave or Comp, where it just says ETH-BTC, USDC. You don't have to know the details here. Now, I appreciate the details as somebody who knows maybe a little bit more than most people who would be getting into this stuff. I don't know. But I'm just thinking from a user perspective, getting hit with this vault information, while extremely beneficial and transparent, would make a lot of people hesitate, I think. So hopefully that pushes Maker towards more of a professional lending and borrowing protocol than Aave or Comp. Not that that's a detriment or whatever to either protocol, but you kind of have to know what you're doing a little bit more with Maker for sure than Aave or Comp. They also have a burning mechanic for the token. Anytime there's a burning mechanic, it's typically more bullish than bearish. We can look at things like PE ratio or market cap versus revenue annualized. Get a value there that the legacy people can understand as far as what's going on, or just a general understanding for most people who understand that metric. Lower is generally better. And if we look recently, the burns have picked up again. This is the total supply, by the way. And if we look total supply, my gripe with Maker has been much of it has been comprised of USDC. At least a third of it's USDC here. So it's a stablecoinception where the underlying is a stablecoin, which is a centralized entity. So at what point, it's like ship of Theseus. How many new planks can we put on this ship before, it's finally not DeFi anymore? It's something else that it didn't used to be previously, right? Is it 50%? Is it 51%? Doesn't matter. Do people care? I don't think people care. It certainly helped the stability of DAI price-wise, but it definitely gives me pause, right? How much of this is truly decentralized if a third of it currently is USDC? If we look at the burning mechanic, it did start burning tokens again in November. And you wouldn't really be able to see that on the chart because that's when price essentially took a downturn. So kind of interesting, the divergence there between the fundamental burning, which admittedly isn't a lot, but it is burning. And for Maker, which is valued at a high value per token, that's quite a bit of USD notional value there. Here's the PE ratio equivalent compared across the board. Maker here at 16, Synthetics at 68 currently, Sushi all the way down here at 2, meaning Sushi's market cap is only 2 times greater than its annualized revenue ratio. Now, unfortunately, these values haven't yet seemed to matter for price at all. Curve has been the most bullish, and it has been on the higher end of this. Sushi's been one of the most bearish. It's been on the lower end of this. Not exactly what you'd expect, I don't think. Uni, Comp have also been bearish. Maker's been somewhat stable, but is more bearish recently. Balancer's extremely bearish. Synthetics bearish. Bancor more bullish than most of this stuff, less bullish than Curve. So just looking at this list isn't really going to help you understand price, at least from my perspective. TVL across the board, 2.35 or 235 billion rather. And Maker was at the top here for quite some time. It's certainly close to the top as well, just on ETH. Curve is multi-chain, so it's hard to compare. Maybe the Gala apple to the SPY if we're comparing apples to apples here. They are both types of lending and borrowing. You could argue DEX in Maker's case. I think that's fair to say. It's a type of DEX. You're trading something for something, but TVL very close here. Maker versus Curve. Recently, Maker got a ton of TVL fairly recently relative to everything else in October, November. Not really sure why that was, but this has declined over the past couple days slightly. Just something to watch. Again, I wish TVL mattered. I wish there was some fundamental metric where I could point to, or a group of fundamental metrics that helped me understand where price was going, but it just hasn't seemed to be the case yet for DeFi. If you look at contract interactions, sort of flat, users sort of flat. None of this looks turbo bearish like price at all. But if we look at on-chain metrics for the token, transaction counts in the line here, basically at all-time lows. Multi-month lows, certainly arguably all-time lows, because average transaction fees on ETH are extremely high, and you're seeing average transaction sizes rise substantially for Maker as well. So it's hard for DeFi to do what DeFi wants to do when the ETH fees are as high as they are. Active addresses in the fill there also declining to multi-month lows. NVT, inverse metric of economic utility relative to price, is rising there. So it's certainly less bullish, more bearish collectively. You don't want to see transaction counts falling. You don't want to see you don't want to see activity, period, falling to multi-month lows for anything. Here's MVRV versus price in the line graph there. MVRV in the fill. And for most coins, this tops out at around a 2x multiple. And for Maker, unlike most of DeFi, this has actually been the case. In May 2018, it hit a 2x multiple. That was the high. Most recently, though, it hit 1.6 in February on MVRV, and then price-wise, it kept going to 5.4 as MVRV was declining. So, well, not perfect, gives you some idea that things are getting more and more overbought, at least in Maker's case. And as far as bear market's concerned, anything below 0.6, 0.5 certainly is in the buy zone territory. Currently, we're 0.85. So as bearish as the on-chain metrics look, there's still more on-chain activity than market cap, which is kind of astonishing here. But if you're buying in a bear market, you want below 0.6, 0.5 for oversold territory. Flipping gears to technicals, if we zoom way out, we go to Bitfinex. Now, for the most part, nobody cared about Maker for years, just was in this 250 to 500 zone until January 2021. And ironically, I think ironically is the word, as inverted head and shoulders as this looked leading into this breakout, this looks head and shoulders-y. So this is a reversal pattern bullish. This is a reversal pattern bearish. I've been talking about this for a little while, but what you don't want to see here is any lower lows at all anymore, because at that point you're on a trajectory that gets pretty ugly, basically to the previous consolidation around 15, and then below that it's back into the previous range. There's just not a lot of price history between 750 and 2K. So the expectation as it sits here is certainly a bearish bias. And if we look at the 50 to 200 volume VPVR RSI, we're breaking below the diagonal support, the arbitrary lines that I have here. Certainly not bullish. Breaking below VPVR, certainly not bullish. The next level down around 15, like I said, volume just kind of flat, uninspired since May. That's been all of DeFi. 5200 recrossing bearish. This had looked decently okay. It had its burn stuff in November. It was popping up on the cloud. Looked like this was going to flip bullish, and then just got dragged down with everything else over the past few weeks. So even the cloud is telling you, yeah, this doesn't look bullish and won't get bullish again until it's back above 3K. So as we stand here, trend metrics not on your side. For the long case, against BTC, it's a giant jumbo mess. There isn't really any tradable signal here that I can really see. It's just in this crazy range from 04 to 07. And ultimately, until it's back above 06, 065, it probably just continues to jump around in that range. And against ETH, it is near all-time lows again. Also does not look bullish. Also had a head and shoulders up here that broke down, 5200 bear cross, right? All the things you'd expect from things that are bearish happened leading into this just gruesome September, October for Maker against ETH. As ETH was rising up in October, Maker just kind of did a bunch of nothing. So even if we flip bearish on everything for the next 4 months, 3 months, 6 months, 12 months, the protocols for all this stuff is going to be fine. The ultimate determining factor is going to be how heavy-handed are the regulatory players in the United States going to be against DeFi, specifically for KYC AML requirements. Are we going to see geofencing state by state, country by country? How ugly is it going to get? The more fractured it gets, the less DeFi it gets. But I guess we'll cross that bridge when we get to it. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.